welcome back. I'm Pratap here. Today is 10th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. This is a highly expensive training program, but we made it a complete free training including all the advanced strategies we developed. And you can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on that Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube video playlist. I kept all the training lessons in this playlist. You need to start your training from lesson 1.1 that is available at the bottom of the page. So scroll down the mouse to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to my training instructions mentioned at our Telegram channel. So visit our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. You get access to all the training instructions. So learn this course according to my training instructions. Definitely you will become a very good independent trader in the coming months. So please make use of this opportunity. Now let's get into the evaluation of the high liquidity, performance evaluation of high liquidity zones. So the previous end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8. 8 high liquidity zones from daily and 75 minutes time frame. Out of these 8, IRB has given 2 trades today, and one is a very good successful trade and one is stopped out with a very minimal loss. So let's discuss them first. After that, we will look into how we fine-tune the remaining zones. And one more zone is also, one more stock also violated, but we identified the stock will be, the zone will be violated because you learned in lesson 16 when a zone will be violated. So let us revise that concept, lesson 16 concept. First, let us look into IRB. IRB is a 75 minutes high liquidity zone. Our software identified this as a rally, 3 base candles and a rally candle. This 75 minutes high liquidity zone fine-tuned with 15 minutes time frame. We have identified 2 order flows. The first one is a drop, base, rally. This is a high liquidity zone. Multiple times this zone is holding the prices. And next one is a drop, 3 base candles and a rally and follow through candles. These are the 2 15 minutes order flows we identified. Again, these 15 minute zones we should fine tune with 5 minutes time frame. Let's go to the 5 minutes time frame. First, let us look into the bottom one. See here, we have a medium size candle legging as a rally. You have a base candle and we have a rally candle. It is a fresh zone. This rally, base, rally, the 5 minute zone is a fresh zone. So definitely we can plan a trade in this zone. And what about the other one? Here, you see here, this 5 minute zone again drop, 3 base candles, rally. It looks like that means almost this zone is almost same as a 15 minutes zone. The risk management is high. So that is the reason why what I did, I went to bring clarity about this zone. I went to 3 minutes time frame. What is the advantage of 3 minutes? Maybe sometimes the risk might be a little reduced. That is one advantage. And we get clarity about the actual order flow because 3 minutes can be used as a supplement to the 5 minute zone. 5 minute zone. So let's go to the 3 minutes time frame. Look into the 3 minutes. Now you got the perfect clarity here. This is a failed ERC candle as a rally. You have 2 base candles and then you have a rally. This is the way you can draw. See, from here it is holding the prices. See here again, you have rally, drop to base candles rally. LOTL zone is created. So multiple times this zone is getting tested. Even today we got the trade. Today when we got the trade, morning 9:33 minutes candle. Go to 1 minute, you get better clarity. Exactly when you got the trade. Today morning 9:32 candle, it reached this 3 minutes fine-tuned high liquidity zone. And then it started moving up and finally reached the target at 9:54. This is the 15 minutes target. Let me show you. This is a piercer zone. 15 minutes piercer zone. Piercer zones you can use as a target. See, from the piercer zone, how sharply again prices came down. So that's why you learned the piercer zones are a very important strategies, and you already learned piercer zones can be used as setting the targets. New order flows in the piercer zones are very powerful. That is what you learned in lesson 28, piercer zone strategies. See, you have seen Nifty moved I think around 600 points from the piercer zone. And today only Nifty again, after reaching 300 points, again it came down to 95 points down. Okay, but anyway, our focus should be on this stock. So piercer zone, 15-minute zone. First of all, where is the 15-minute zone? Here. You have a rally base drop, the 15-minute zone. This zone is pierced. 15 minutes candle is again closed inside the zone. Exactly, this is the one we got the target. And moreover, see the RR. It has given 1:5.4 RR it has given. It's an excellent trade. Within how much time it took? We got the trade at 9:30, 5 minutes candle, reached at 9:50, 5 minutes candle. That means within 20 minutes our trade is completed. And how much profit it has given IRB? Let me open the Excel sheet. IRB has given 7,790 rupees profit, which is 5.9% ROI. That means close to 6%. 6% is our average intraday ROI for high liquidity zones. So almost to average intraday ROI we achieved. This is the fine-tuned 3 minutes HLQ demand zone in 75 minutes HLQ zone. This is a fine-tuned zone only, but high liquidity zone. The advantage with high liquidity zone, until it is violated, we take multiple trades. That time when it is violated, okay, because earlier we captured so many profits. The time when it is violated, even if it violates, okay, we don't really worry about that. The reason, already we captured more profits before this zone. And again here, when it reached 12.5, definitely you might have taken another trade at 12.5, but this would have been stopped out, but that is okay. Compared to the profit what you already got, 7,790, this loss could have been negligible. Maybe you might have got maybe some 1,500 or 1,400 rupees loss you might have got, but that is okay. So finally, at today at 12:30, this stock got at around 12:20 or 12:15 or 12:20, this stock got expiry date. Okay, but next again we got another trade here. 14:20, the last 1.5 hour of the trading session, or maybe the last 1 hour of the trading, close to 1 hour. So you might have taken a trade here, because here you see drop base drop, this could be your target, definitely, because the last 1 hour target should be 5 minute zone. Definitely 1:3 or minimum RR should be there up to here, it will be there. Maybe you might have got 1:4 or even more. It stayed here for some time. Go to 1 minute. Few candles it holded the price. Almost 3 candles, 3 minutes it holded. But supply is much stronger. Institution violated this. See here, drop base drop. The 1 minute zone is created. And then this zone is violated. So because some people will ask the question, what is the reason for the violation? See, reason is only one reason in supply-demand zone. Maybe supply exceeds the demand zone, that's it. Similarly, if a supply zone is violated, demand exceeds the supply. These are the only reasons. Is it not having any order flow? It is having. That's why it holded for some time. But not good enough to hold because maybe supply is very strong today at this point of time. So this is the zone violated. And how much loss it has given? 922 rupees, which is 0.7% negative RY. See, when you got the profit, you got 5.9%, close to 6%. But the moment you got the loss, it is only 0.7%, including the stop buffer. 0.7, including the stop buffer. So, overall, you would have got a very good profit from IRB today. Okay, apart from that, there is one more zone is violated, and we predicted the zone will be violated. That is what happened. See the accuracy of our analysis. The Kalyani Zolas, we clearly predicted this zone will be violated. Why? First, we will see this is a 75 minutes high liquidity zone. It's a very old zone, almost 10 months back, I think. So this is identified as a drop base rally, the high liquidity zone. This is the 20 zone 2024. Almost 9 months back old, this zone is created. Let's fine tune this with 15 minutes time frame. Look into the 15 minutes time frame. There is no proper structure here. 15 minute structure. So here we have a drop, we have a rally, no base candles in between. So that's why we can't really fine tune. But in the recent price action, recent means not exactly recently, but sometime before, prices entered into this zone when in 29th January 2025, almost 2 months back or 1.5 months back. So at the time, see here you have a rally candle as a leg-in, 2 base candles and a rally candle and follow-through candles. An excellent 15-minute zone is created here. And within this 15 minutes area, go to 5 minutes time frame. We have an excellent 5-minute zone is created here. So here you have a drop candle, you have a base candle, you have a rally and follow-through candles. Drop, base, rally. This is the fine-tuned 5-minute zone. And this fine-tuned 5-minute zone is a tested zone. Recently, prices tested. See here? Exactly from the 5 minutes area, how sharply prices moved up. And see the move after that. Continuation to that very big move it has given. And type 2 proximal only we have drawn this zone. Type 2 proximal is tested. So definitely it is planning another trade is a risky. Because we know that there are higher chances, not only this zone, the whole zone will be violated. Why? Because there are no more order flows. Only one order flow, and that is not a fresh fine-tuned 5-minute zone. So this is the reason why, see today what happened, easily the zone is violated. See, prices were gone. If you look from the 75 minutes time frame, you get better clarity. Today, it is completely violated. So we predicted this zone will be violated. This is the beauty of identifying when a zone can be violated. That is what you learned in lesson 16 in our training course. The second video in lesson 16. When a zone can be violated, we discussed all the scenarios. Because 80% scenarios, we are in a position to identify when a zone can be violated. What about remaining 20%? Remaining 20%, institutions may create a new order flow and again push the market up. Next retracement, we get the trade opportunity. That is what happened here. See here. Earlier, actually, according to the earlier analysis, this zone has to be violated because it doesn't have any proper structure. But is it violated here? Not violated. Why? Because here institutions created a new 15 minutes order flow inside a 5 minutes order flow. That is in the month of January this year. 28th January, they created a new 15-minute zone and then pushed. Otherwise, if they don't create, this zone would have been violated. And here inside again a fine-tuned 5-minute zone. That's why it provided a trade opportunity for us. It provided a trade opportunity on 3rd March. 1 week back, this zone provided a trade. It gave a very big move after that. And now we don't have any more fresh fine-tuned 5-minute zones. Now we can say this zone will be violated. There is only condition it should not violate if again institutions create a new order flow and again push the prices. Next time again we get trade opportunity. But is that happened this time? No. Earlier it happened, this time it didn't happen. That's why the zone is completely violated. That's why we are saying 80% scenarios, we are in a position to predict when a zone can be violated. 20% scenario is where institutions create a new order flow and again push the market up. Okay. And remaining we didn't get. Few stocks prices came somewhat close but not good enough to take the trades. Otherwise we would have got some good trade opportunities. First let us look into the stocks. First one is a Havells 75-minute zone. Sorry, this is a daily zone. Software identified this as a rally candle. 1, 2, 3, 4, 5, 6 base candles and a drop candle. Maybe that way, or maybe rally, 3 base candles and drop. Either way, it might have identified. Maybe this is the rally candle, 6 base candles. I didn't remember exactly. Maybe this could be the right scenario. Drop means pro gap. Sorry, of course it is pro gap, but hidden body. You add the hidden body, this is a drop candle. And this zone is fine-tuned with 75 minutes time frame. See here, rally, base, drop. Again with hidden body. This 75-minute zone again fine-tuned with 15 minutes time frame. 15 minutes, I'm not really convinced, but okay, let's see. Let me hide this large gap, you will get clarity. Rally, 2 base candles and a drop candle. See, rally, 2 base candle, drop and follow through candle. But this base candle, I'm not really sure whether to consider this as a base or failed ERC because it is on the border situation. Okay, what I thought is let me draw. If a fine-tuned 5-minute zone is there, probably it may work next time. That is what I thought. Somewhat like we compromise on drawing the zone. And I don't have clarity, this is really a medium size, a little bigger than medium. If it is a little bigger than medium, maybe it is a large candle. So I'm not convinced fully. So that's why, okay, I kept this as a rally, 2 base and drop candles. Go to the 5 minutes time frame. 5 minutes, we have an excellent fine-tuned zone. So here we have a drop, base, drop candle, and again next candle with hidden body, another large follow through candle. So this is the area we can plan trade. That was my trade plan, but today prices entered into the zone, we did not get the trade. But did you notice here today 5-minute zone, we have a drop, 3 base candles and drop. Of course it is a medium size candle, but part of the base. If you draw a zone, see, prices entered and after that a very big move. You would have got a very good profit, right? But it should be a fine-tuned zone. Now go to, see, from the back side we are doing the analysis. Generally we do top-down analysis. Now we are doing analysis in a reverse way. Sometimes this analysis also is very perfect when we have confusion in fine-tuning the zones. In top-down analysis, you can do in the reverse engineering, drop-based drop. Now go to 15 minutes time frame. 15 minutes time frame, you see you have a rally-based drop. A medium-sized candle, maybe this one, comparing with the other candles. So this is the 15-minute zone. Inside 15, you have a fine-tune. From there, it picked up the orders and came down. Maybe this is a dynamic zone, right? Initially, I thought, but the moment you go to 75 minutes time frame, there is no 75-minute zone here. Now it is created. Now you can draw, but already it gave a trade. Now you can draw a zone like this, 75-minute zone. You have a 75, inside 75 you have 15. This 75 is overlapped with the daily time frame at the proximal line. But here the problem is, next time when you want to plan a trade, this is already a tested zone. This is already a tested zone. The fine tune, go to the 5 minutes time frame. But did you notice rally 1, 2, 3, 4, 5, 6 base candles and a drop candle? If you draw a zone like this, a 5-minute zone, this is like LOTL zone, right? LOTL means new order flows will be added into this. I'm deleting this LOTL area. Maybe new order flows, maybe this could be acting as a high liquidity zone. If that is the case, next time again you can plan the trade within this 5 minutes area. Generally, when LOTL zones will be created in HLQ zones. Can we confirm based on LOTL it is HLQ, high liquidity zones? We can't 100% confirm. Maybe 80% level we can assume. It need not be. LOTL means it is a high liquidity. There is no such concept. But such kind of concepts takes place in high liquidity zones many times. That's why we are assuming it could be. Because a new order flow is added, next time you can plan the trade. But today we missed this opportunity. Why we missed at the time of this 15 minutes and 5 minutes fine-tuned zone formation, 75 minutes zone formation is not completed. Look into 75 minutes. 75 minutes and the last candle only it formed. But before that, this zone is already tested. See, before that, this 15-minute zone is formed here. And before that, fine-tuned 5-minute zone is formed. Before 75 minutes confirmation, this zone is already tested. But this, and another problem is this risk is beyond 2%. That is the reason why next time you can plan a trade like this. Because from here the origin is started. This is a medium-sized candle, I agree, but the origin is started from here. Even today, let us assume this is a 75 minutes formation is completed. Let us assume before this zone is tested, let us assume. Still you can't take this trade because by adding stop buffer, I calculated the risk is 2.3%. You can't take a trade beyond 2%. Maybe you can position size and you can take. But in F&O you can't take. Unless you are a high value investor and you buy so many lots of futures, at the time you can do position sizing. But we are small investors. Hardly we buy 1 or 2 or 3, maximum 3 futures, not beyond that. So we can't do position sizing. If the risk is beyond 2%. So that is the reason why what you can do, you can take the trade till this actual origin where it is started. Origin is started from here. Imbalance started from this candle. But before that the time is completed and the imbalance started in the next candle. That means this is the area we might be having strong institutional order flows. That way we can plan the trade next time. The advantage, the risk will be below 2%. Including your stop buffer, risk is below 2%. and the risk is below 2%, you can plan a trade. Definitely this area, strong order flow will be there. Let us check from 3 minutes point of view, any proper order flow is here. Yes, you see, 3 minutes you have a rally based drop, follow through candles. That means this is our actual order flow. This is the 3 minutes. But today price did not reach up to here. Next time in future when prices are entering, you can plan your trade. See, here you have the real order flow. Still, if you have any fear that price may not reach, we miss the trades, if you feel like that, you can plan like this. Anyway, risk is below 2%. This is the way you can plan. Even though it is not the leg out, this is the actual leg out for 5 minutes. But the origin is started. Imbalance is started from here. Because imbalance is started, you can plan your trade. Luckily, inside this area, we have a perfect 3-minute zone is also there. See, inside this area, you have a rally-based drop is there. 3-minute zone. And follow through candles. See, this is how we should analyze the charts. See, when I am analyzing like this, you will also be in a position to analyze. But the only thing is, some experience you need to get. That's why every day my analysis will be helpful to you to think in a better way. See how I am thinking. Same way you can also think. But only thing is some experience is required. That's it. Because you are beginners, you have to see so many complicated scenarios on the charts. Because I already seen so many complicated scenarios all these days on the charts. So easily at least I can take decisions quickly. I can plan the trades. So this is the reason why today I didn't consider this trade in our Excel sheet. See, in our Excel sheet we don't have the trade. Only IRB is there. But what I am trying to say, this is one opportunity we missed today. But even if you want to take opportunity, still you can't because the risk is beyond 3% until this medium size candle part of the base. Okay, this is about Havels. This is one learning you have. Next one is IGL. This is also daily high liquidity zone. IGL, I think we already discussed. Yes, last video also, previous video also we discussed. It doesn't have any order flow. I already shown you in the last video. Sorry, 75 minutes. 75-minute structures are not good in this area. So that's why we thought this zone will be violated. Anyway, today also price did not reach. Next one is Tata Motors. Tata Motors is having a fine-tuned 5-minute zone, but we didn't get a trade opportunity. How I analyzed? First let us look into daily time frame. Tata Motors identified as a drop candle, 2 base candles and a drop and follow through candles. So this daily zone is fine-tuned with 75 minutes time frame. 75 minutes, here you see you have a failed ERC candle as a leg in. You have 1, 2, 3, 4 base candles and a drop candle. And this 75 minutes area again fine-tuned with 15 minutes time frame. Look into the 15 minutes time frame. You have a leg in as a failed ERC, base and drop candle. And this 15-minute zone again fine-tuned with 5 minutes time frame. Here we have an excellent drop, base, drop and follow through candles. But it is a tested zone. Because it is a tested zone, you can't plan a trade in this fine-tuned 5-minute zone. Maybe there are higher chances Tata still might be violated. IRB we discussed. The next one is JSL, Jindal Stainless. This is a 75 minutes high liquidity zone. Let's go to 75 minutes. We have a rally, 2 base candles and a rally candle. Sorry, something wrong. I'm analyzing this one. I'm supposed to delete. Old one I didn't delete. Sorry. This is the one. Rally base rally. This rally base rally again fine tuned with 15 minutes time frame. Here I have drawn rally, 2 base candles and rally, the 15-minute zone. This one again fine tuned with 5 minutes time frame. Rally base rally, this is the origin. See, this is the area holded for several times. Today actually last hour it came, it seems. Okay, before I started recording this zone, prices entered. Till then prices did not enter in this area. Maybe the last half an hour prices entered in this zone and then violated. This origin is violated. Anyway, this happened in the last half an hour of the market. We don't consider this trade. Till I started recording of this video, price did not enter. Maybe the moment I started, prices entered and finally violated the 5-minute zone. This is the origin for this 15-minute zone. But see, while drawing this origin also, I am not really comfortable with this. The reason is these candles are looking big candle, very big candle. But the origin is there for this area. I thought this could be a good area. But anyway, it is gone today. Zone is also violated. Kalyani Jewelers we discussed, and Pidilite Industries. This is also a 75 minutes demand zone. Okay, before I started this video recording, this zone is not tested. Now it is tested, means maybe the last 5-10 minutes prices might have entered in this area. But we will see. It is having 2 fine-tuned order flows. First of all, this is how our software identified this zone. This has a rally candle, medium size, 1-2 base candles. This medium size drop candle is also included as part of the base. And then see the hidden body. From the low of this candle, so you get a big large candle, high explosive leg out candle. At the hidden body, high explosive leg out candle. So this is the way our software identified this as a high liquidity zone, Pidilite Industries. But this is having 2 institutional order flows. The first one is, this is the one. This I considered as a failed ERC candle and a base candle and a rally candle. That means rally base rally. And this one is a drop base rally with hidden body. A rally candle with hidden body. These are the 2 15-minute zones. And these 15-minute zones are fine-tuned with 5 minutes time frame. See, this is the failed ERC as a drop candle and a base candle and a rally candle. This is the fine-tuned 5-minute zone at type 2. And also this is the drop base rally. This is another fine-tuned 5-minute zone. So these are the order flows. Before I started recording this video, I think today I started at 3 o'clock or maybe 3:05. At the time, these zones are not tested. But see, I think last 5 minutes candle, prices entered and sharply came up. If you look into 1 minute time frame, when actually it reached at 15:28 candle and 15:29 candle. But anyway, we can't consider the trades, the last half an hour, whatever happened. Sometimes we see the last 5 minutes also, these fine-tuned zones give good results. But if anybody is planning your trades in the last half an hour, they are crazy trades. But there are times we took previously. But we can't, because see, many times what happened the last half an hour and all, intraday related trades, anything institutions planned, they will cancel their trades. So that's why we see sometimes easily the zones will be violated. Sometimes institutions might be holding. We don't know how they behave. So that is the reason why mostly we don't trade intraday trades during last half an hour. Any short-term traders will take the trade. Suppose if it is supporting your short-term trading, say bullish trade setup, at the time you plan your long trade and you will hold. Next day prices will be moving up. If it is not a bullish trade setup, you can't plan your trades, right? But anyway, now it is a tested zone. Next time you can't plan a trade in this area because it is already tested. Okay, this is about Pidilite Industries. And the last one is Sonocoms. Let's see whether it is tested last minute. Yes, this is also tested. At the time when I started recording this video, this fine-tuned zone is not tested. But remember how perfectly we are drawing these zones. That is important. Maybe these trades are not valid because they are last half an hour trades. But the point you have to understand, how we are fine-tuning the zones, how perfectly we are drawing the fine-tuning the zones is very important. See, the skill is very simple. What you do inside 75 minutes, you identify 15-minute zone. Inside 15 minutes, you identify 5-minute zone. That's it. Is there any difficulty in finding? No difficulty. Sometimes you might be having confusion whether to accept as a zone or not to accept. Maybe at the time you may feel a little difficulty. For that also I gave you a technique. What is the technique? Do reverse engineering. Draw 5-minute zone. Then go back to 15 minutes. Check within that 5 minutes area there is any 15-minute zone. If there is a 15-minute zone, you draw them. If there is no 15-minute zone, you delete that 5-minute zone because that will be violated. Aggressive trade setups. Aggressive trade setups without price action clues, we can't take proper trades. Okay, first of all, how I fine-tuned, because the 2 order flows are there in this area. So this is a rally, 3 base candles and rally. This is a medium size candle, part of the base. Our software identified perfectly, and a rally at the hidden body. It is a rally candle, big rally body you will get. Okay, next 15 minutes time frame. Here 2 order flows identified. Rally, base, rally, and again rally, base, rally, this one. So you may say this is really a rally. Hide this gap, you will get clarity. Hide that candle with having gap. Now you see, you will get clarity. Rally, base, rally. A big candle with a big wick is also there. Large candle. Here I have drawn the 5 minutes. Within that again 5 minutes candle zone I have drawn. Consider this as a rally candle, 2 base candles and a rally candle. And here also, this is a failed ERC candle as a drop candle, base candle, rally candle, drop, base, rally. Another fine-tuned 5 minute zone. See what happened today. See, this has happened at last candle. Already after we started the recording only, but before that we already fine-tuned all these zones, right? I already fine-tuned all these zones. See how perfectly it gave a big rejection. Just tested the zone and sharply how it moved. Go to 1 minute, you will get clarity which candle you got. Yeah, actually you got it in 3:28 candle. 3 o'clock 28 minutes candle, prices entered and then sharply moved up. How many points move? This is a 507.95 paisa. Let us see. See, 507.95 paisa. And up to where it went, the high of this candle? 512.45 paisa. So 2 rupee 45 paisa moved. 2 rupee 50 paisa. 2 rupee 50 paisa. 2.5 rupees moved in just 1 minute period. You got the trade and sharply moved up. This is a fine-tuned 5 minute zone. Can we consider it is now it is tested and we got good profit? No. Last half an hour we are leaving. Previously we in a crazy manner we analyzed even last 5 minutes and even last half an hour also. But I decided not to encourage any trades during last half an hour. Okay, high liquidity zones, because they are high liquidity area, you feel like they are giving you good profits. But it is giving a wrong message to beginners. They are feeling that, okay, last half an hour also we trade and taking wrong decisions. So that's why few additional precautions I have taken. That's why recently means some 3-4 months back, I kept a very strict rules. Morning 9:55, 15-minute candle trades we should not consider. Last half an hour trades we should not consider. Maybe we discuss. If it gave a good move, let us check the performance of our high liquidity. But we don't add those statistics into our Excel sheet. So that is the reason why today I started, because until 3 o'clock I watched the charts and I started recording at 3 o'clock, so that I don't want to consider any trades after 3 o'clock. But see, while analyzing during our analysis itself, it went to our fine-tuned area and sharply moved. Here, I'm not really, my concern is not about considering these trades or reject these trades. My concern is not about that. We don't consider the trade. That is very strict. But what is my real concern here? Or maybe what is my real interest here? I want to people tell you how our fine-tuned zones, effectively they are working. See, Pidilite Industries also, same thing happened. Went to the fine-tuned and sharply it moved up. From here. JSL is violated. Last 5 minutes here. 15:15 it is violated. Anyway, we don't consider, last half an hour we don't consider any trades. But before that, this is also, see, prices entered and sharply it moved up. Don't look into this zone violation. But before that, you see here, the fine-tuned area, how it moved again. It pushed, maybe not good enough to get the profit. When it happened, 3 o'clock, 6 minutes. After that, it holded some time, it gave a resistance. Resistance is not the right word because it is demand zone. So gave some support here, good support, and finally violated. All these are all fine-tuned zones. Okay, this is about, but today we got 2 trades from IRB. One is a successful and another one is a failed. The remaining trades we did not get till the last half an hour. So this is about our HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.